Hi everyone, let's jump into the micro Elliott Wave scenarios in Bitcoin and see what is most likely based on Elliott Waves, because this price action to the downside is actually quite complex to count, and what I then always like to do is just put all different scenarios on the chart over here and talk to myself and now to you as well, which one is less likely, invalidated or most likely. So if we then go through the different scenarios, the first one I like to show you is a diagonal, and this scenario is invalidated. Why? Because this wave 3 over here and then a potential 1, 2, 3, 4, 5. This wave 3 is longer than wave 1, which is not allowed. So you can see that this wave 3 is passing the 1-to-1 of the beginning to the end of 1 to then the high of a wave 2, which is not allowed in a diagonal. So therefore this move is invalidated. If we then look at a zigzag, we're looking at a 5, 3, 5 wave move where the most common target area for wave C is between the 1 and the 1.236, taken from the high to the low of A to then the high of this wave B. The problem, however, is mainly this structure over here. So if this is then a wave A and we're looking for a wave C to the downside, then yeah, you can count an impulsive structure over here, for example, or a 1, 2, 3, 4, 5 over here. But where does this structure over here belong? And therefore, this is currently an alternative scenario and not a preferred scenario to me. If we then look at a flat, it is invalidated because a flat is a 3, 3, 5 wave structure. So if you count this move to the downside as an impulsive structure in a 1, 2, 3, 4, 5, that is fine, but it can't be a flat because if this is then a flat in an A, B, C, this wave B has to reach at least the 0.9 Fibonacci taken from the high to the low of then wave A, which clearly price didn't do. So therefore a flat is not a possibility and therefore invalidated. If we then go to a WXY, then this move to the downside is a W in a 3-wave structure followed by a 3-wave structure in a wave X, and then eventually we would be looking for a 3-wave structure to the downside for then a wave Y, where the most common target area for a wave Y is between the 1 and the 1.236. And the problem in this scenario is that price already reached this area over here without showing a clear 3-wave structure. So in a potential wave Y, you can then have a zigzag and then a 1, 2, 3, 4, 5. But this first move to the downside and then a wave A, B, and then looking for a C in a wave Y, so a 3-wave structure, this first wave to the downside already hit the most common target area for wave Y. And that's not what you want to see, because if this is then only a wave A, followed then by a wave B, or maybe this is going to be a wave B, and then a wave C to the downside, you can expect that price is going to go far below this wick over here. And yes, a rare target is the 1.618 for a wave Y, but that of course makes it then an alternative scenario, another preferred scenario. So also this WXY is not looking too sexy. And if we then go to a WXYXZ scenario, and I like the originality of Youssef Yat, because actually Youssef in the group in Discord over here came up with this scenario. He asked me, can this be a WXYXZ? So a WXYXZ over here. So thanks Youssef for the idea. So I put it on my chart as well to explain it in this video. So then we are looking at a W, 3-wave then in a wave X, then a 3-wave in Y, 3-wave and then a wave X, and then eventually 3 waves to the downside in a wave Z. So talking about this scenario, I don't really like it as well. It's like an alternative for me. First of all, a WXYXZ is a very rare pattern. You don't see these very often. And because it is a rare pattern, it is always going to be an alternative and never a preferred scenario, really. Also, you can at least see that wave Y hit the 1-to-1. And if this is then a wave Y in an ABC, because it is a 3, 3, 3, and then a 3, and then you're looking for another 3-wave structure. So it's all 3 waves. That is great, but that means that in this wave Y, you need to have a zigzag of an ABC. However, if this is an ABC, then wave C is very, very long. So if we take the trend-based fib extension from the high of X to then the low of A to then the high of this wave B, and then an A, B, and then wave like down here is wave C. And I put on the zigzag targets that you can see that the 1.618, yes, it has been very nicely respected over here, but this is a rare target for a zigzag and not hit very often. So that's a bit edgy as well, but at least the 1-to-1 over here is a target for a wave Y. And you could say that around the 1-to-1 price then started to range. So, okay, Then we have wave X, and the most, or at least a minimum target usually for a wave X is the 382 all the way to the 886, but the 382 is usually a minimum target. But as you can see, if we take a fib from the high of X to the low of Y, it has not been hit, which by itself is also very rare. And then we would be looking for a three-wave structure to the downside in wave Z, where the most common target for a wave Z is between the 1 and the 1.236, which is between 26.4k and 26.2k, which also includes the target area down here between 26.3k and 26.2k. And you get these fibs over here by a trend-based fib extension from the high to the low of W and then the high of wave X. So yeah, this is an alternative scenario for me. Price, of course, can move to the downside and then react, but I'm thinking about a different scenario instead of a WXY, because a WXY is so rare. Wave X over here, the 382, has not been hit, and also this wave Y over here is very edgy, right, with a zigzag, but the zigzag hitting a rare target, you know, I'm not so sure about that. So what I'm actually looking at the moment is potentially an impulsive structure, but then this wave 3 being a little bit shorter than the most common target. So in a potential impulsive structure, and then a 1, 2, 3, then a 4 and 5. Usually wave 3 is reaching the 1.618 Fibonacci trend-based fib extension taken from the high to the low of 1 to the high of 2. But as you can see, most likely over here, the end of 3, it did not reach the 1.618. However, the main rule is that a wave 3 is not allowed to be the shortest wave in an impulsive structure. And as this wave 3 over here ended below the 1-to-1 of this wave 1, that is valid. So wave 3 is longer than wave 1, so it can be an impulsive structure. Of course, this wave 1, it's not a very clean impulse, but we've seen that more often. Of course, it looks a bit more 3-wavy, but it has to be a 5-wave structure in this scenario. The high of wave 2 is a little bit of like either or. If the high of wave 2 is over here, you can count this as a 1, 2, 3, 4, and then a 5-wave structure to finish this wave 3. So that would work very nicely. If you put wave 2 over here, then you could still count a 1, 2, 3, 4, and then a wave 5. So in both scenarios, this can potentially then be the low of this wave 3. For then a potential wave 4 over here in a complex structure, either a WXY, because this over here is a 3-wave structure to the downside, so looking at a 3-wave structure, but either like some sort of a corrective structure before then a continuation to the downside in a wave 5, where then the main target for me for this wave 5 is going to be that target box again, which is sitting between 26.2k and 26.3k. So also this impulsive structure, not the cleanest because of this wave 1, but mainly because of this structure over here, where this looks very corrective, and then a potential 4. If we look at the CVD divergences, we actually got some bearish stuff going on over here, where you can see even locally 15-minute time frame, we have red candles on the chart over here, but we have the CVD going up, which is a bearish CVD divergence even inside these candles. But also if we look to the left, we have a lower high on price, but on the yellow line we have a higher high on the yellow CVD, which is not really what you want to see. Of course, the CVD can be leading if there are many buyers, but locally I would prefer to see some bullish divergences. However, if we do zoom out, then we do have bullish divergences over here. So we have a higher low on price and we have a lower low on both the blue and the yellow CVD line. So we do have bullish divergences on the 1 hour, but locally the bullish divergences are not yet there. We have bearish divergences as just mentioned, but if price is going to take this high, the bearish divergences are going to be invalidated and it is going to be leading. So for me over here, it is very difficult to find a potential long setup at the moment, because hey, we always look for proof of support. If we're looking for a long setup, right, you need to follow your plan. Maybe you're looking for market structure changes, bullish divergences, volume, whatever it is. But yeah, looking at the CVD, not too great, right? So maybe like a 3-wave structure over here before then continuation in a wave 5. So for me, the most likely scenarios, let's say, is this impulsive structure that I'm looking at. I think the zigzag is also still a scenario to keep in mind. And even though this is very rare, I mean, I like the idea. Maybe if we take this high and then reach the 382 for then a move down, it might be more likely, where this wave X is going to be a little bit of a longer structure. But yeah, these are my thoughts, right? Like sometimes Elliott Waves is very, very clear, and sometimes Elliott Waves is not so clear. And in both scenarios, I'm bringing you the content. So that being said, I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator you can use, in my opinion. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.